could talk about companies like Amazon. Bezos had a hard time raising money early on, but when he was able to start articulating that it was not just about selling a few books online, it was about understanding and having the logistics and cracking the code there so he could expand into other products, and why the word Amazon was used because it's the jungle and there's a lot there.
Hmm.
That's where people got attracted to that and started to sync up and provide the investment capital that Amazon needed to be what it is today.
You have found Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. We're locally underwritten by the Bank of Sun Prairie. Downloadable audio episodes can be found on the podcast link found at drawincustomers.com. Today, we're welcoming / preparing to learn from Patrick Donohue, the founder and CEO of Hill Capital Corporation. So, Patrick, how is it going today?
It's great. How are you doing, James?
I'm doing very well. So tell us, for the listeners at home, viewers at home, what is Hill Capital Corporation?
Hill Capital Corporation is an investment fund. We invest $500,000 to $1 million directly in entrepreneurial-led businesses. And we are investing out of Fund 2 right now, which is $25 million fund.
Wow. Is that just a bunch of investors, or is that government funded by any means, or grants
No,
or anything like that?
it is
You never
all
know. They're
individual.
handing money out left and right. So
No, yeah, no, it's all individuals, it's all hard-earned money, and many of our investors are multi-generational business owners, so that makes us very unique as well. So we really not only provide capital, but the community, in a network for the entrepreneurs, the companies that we invest in, and support them in their journey. Because what we really care about is that they have optionality. Whether they want to build their business and hand it over to the next generation, or if they want to sell it, or whatever the case may be. So we've got some unique ways that we support and structure our portfolio companies.
all right, very cool. So
Yes.
the investors that you get, are they, because you're investing in small business, so are they looking for a return over the course of 1 or 3
Oh, of
years, or is
course.
it longer term?
Well, definitely longer term. And, the golden standard is any investment fund really needs to outperform the S&P 500,
Mm-hmm.
what somebody could get in the stock market. And I talk about that with our stakeholders a lot. And so they need a reward that gives them the economic incentive to do something other than put their money in a mutual fund or an ETF. And
Sure.
so, if you kind of think about big picture numbers, one could expect 8, maybe 12% on an annualized basis from the S&P 500. So our investors need to expect something higher than that. And so
Okay.
that's what we look to achieve, is something that mid to high teen returns net to our investors.
Sure. So one thing I've always been curious about with investment funds like this is,
Yes.
if I'm an investor, I throw some money at this thing, is the idea that I'm contractually obligated to keep my money in there for a finite period of time? Because it's not liquid.
Correct. It's not liquid. And so how funds work, generally speaking, is that somebody commits $1 million, but there's a drawdown period. So and it's usually 2 to 4 years, and the fund life is usually 10 years. So somebody commits $1 million, they might have a couple $100,000 a year drawn down. And then that money is fully invested, and then there's a harvest period where they're getting a return on that money that they invested.
So when you say drawn down, you mean it's going from essentially their bank to the
Correct.
investment?
Yeah. So
Okay.
let's just say you committed $1 million, then you're not putting that $1 million in that fund day one like you would buy a mutual fund per se.
Oh,
They would basically do a capital call and say, "Hey, James, we've got a deal we're buying and so on and so forth. We need to draw down 250,000 of your $1 million commitment." And
all
then
right.
that, and then there's, if somebody can't live up to that commitment, then there's basically penalties or things like that that would dissuade somebody from doing that.
Sure. And then yet you said a 10-year life, but
Mhm.
I imagine, is that from this point in time, or 10 years from the time that the investor committed?
It can actually be both, but a lot of times it's from once the first drawdown happens is when the clock starts ticking. It
Okay.
all depends on the fund docs. And there's, I have a very good friend that's in real estate, and I was chatting with him while we were in Denver the other week, and he was sharing insights on various structures, and like real estate, they've got a lot of different ways they do things. So
Oh
it
yeah.
all depends on the structure and how they put it together. And those are very important points for any investors that are looking to invest in, a private fund, to understand what the mechanics are and how that all works.
And do the investors get any say into what you're investing in, or they're just essentially investing in your fund to trust you to do, or you and your team, I imagine?
It's a combination. There's a high level of trust, of course, by default. But we do have an investment committee, and LPs are investors are part of that investment committee. And we also have our investors who are just part of our community. And in our community, we call them ambassadors. They are advisors to us and to our portfolio companies. And so they can really be as involved as they want to be. We love and encourage people to be involved in Hill Capital, because that's what makes us special, is when those individuals are connecting with the founders and entrepreneurs of our portfolio companies. That's where, frankly, the magic happens.
All right.
Where they're sharing expertise and insights and other connections. That's where it really gets fun.
Interesting. So
Yes.
tell me, as far as finding the businesses to invest in, what are the ground rules for what you're looking for? I imagine it's not food trucks or something like that.
Well, we are investing in diverse businesses, and intentionally doing so. We want to have a diverse portfolio. So in Fund One, we have everything from a company that is creating human liver cells, and
Oh
that's called
wow.
Cytotherix, and Mayo and others are investors, and that's based out of Rochester, Minnesota. And so that's a very complicated biotechnology company. And we've also invested in a baby store on Broadway in Little Falls, Minnesota, and it's called Babies on Broadway. And Adele built up that business in Little Falls, expanded to another location, but has built a heck of an e-commerce store. And she has customers all over, especially in Naples and California, because her customers, she has very high-end baby products, and her customers love to buy from Babies on Broadway in Little Falls, Minnesota, and a lot of them will talk to Adele directly. So she's
Oh, fun.
very high touch customer service.
All
So
right.
it has been very diverse in the companies we've invested in. That's what we love, and that's what makes it fun.
How do you find them? Because there's small businesses everywhere, starting, coming, and going.
Exactly. Well, that is why, like in your hometown and area, like in Madison, Wisconsin, I've come in and given talks and have connected with, economic development and the Small Business Development Center. So we, over the years, have done things to make personal connections with events and have sponsored events and so forth. But at the end of the day, James, it's word of mouth, it's referrals. So, you may bounce into a company and say, hey, you should know Patrick, and give him a call at Hill Capital. And that's the vast majority of the companies that we're interfacing with on a weekly basis. We
All
do
right.
get, we show up on lists, of course, and so forth, and we will get entrepreneurs that come to us cold, and we'll hit the apply button on our website. And what's nice about us is we've built out our team where we will take meetings with everybody. We get to know businesses, because our thesis is that it may not be a fit for both parties today, but over time it may be. And so we're not hesitant to get to know an entrepreneur, wherever they are in their journey.
Sure.
Uh, and so that's an important part of it, is word of mouth, and really being respectful of the entrepreneurs and where they are in their journey. So we try to help them wherever we possibly can.
So you talk about where the entrepreneurs are in their journey. Is the idea that you're investing in businesses that are startups, as well as maybe in some form of growth mode of some kind, I
Yeah, the
guess?
majority of our companies are doing 2 to 5 million in revenue when we invest,
Okay.
and are looking to get to 10 to 20 million in revenue. That's our bread and butter. Cytotherix, when we invested, was pre-revenue. We invested in a number of companies that were well below $1 million when we invested, like Go Route out of Rochester, Minnesota. He had a few $100,000 in revenue, but he clearly had a product that was being purchased and used in the marketplace. And it was crystal clear that our money could be utilized for sales and marketing to help him get Go Route to the next level. And that's exactly what has happened. What we like to say, James, is that we will take execution risk. We don't take concept risk. So if something is really early stage and startup phase, we would point them to Generator, which started in, in Milwaukee, Madison area.
Hmm.
And we'd point them to accelerators like that, because that's a much better starting point if somebody's really at the concept phase than we would be.
Sure. Okay, that makes sense. That makes
Yep.
sense. Tell me, when you're looking at the 10-year fund versus the business investment, I'm trying to think, even all the businesses that I've been involved in, 10-year plans are just, you don't know what's going to happen in 10 years.
Well, and that's just as the fund. I mean, a lot of times the time of our investment is 5 to 7 years. So,
Okay.
and what's unique about us, James, is that we have a proprietary structure that we use. It's called a VC equity-based note. This equity-based note is structured so we can get paid back over time. So we don't have to wait for and hope and pray for the company to sell for cash someday. Because that's the elephant in the room. And it's a big reason why I wrote the book, Breakout Valuation, is to start to shed light on this. But once somebody sells stock to an investor like an angel or a VC, they're on a path to have to sell that business for cash.
Hmm.
And that has its own set of challenges, especially because time is no one's friends when you're calculating an annualized rate of return.
Right.
So that's where some odd things can happen where people are making decisions based on trying to, repay or provide liquidation to their early shareholders versus what they may have wanted to do, which is actually build a lifestyle business or a business that's multi-generation and hand it over to their kids someday. So that's why we think very differently than traditional investors about how to invest in and support founder entrepreneurial-led businesses.
Yeah, that is interesting as far as the exit strategy or the exit goal for a business when you have investors versus when you're just on your own. I
Exactly.
imagine when you're talking about was it liver cell business?
Yes.
Okay, I imagine
Cytotherapy.
something like that. They probably, I don't know what's all involved with that, but I imagine it's expensive.
It is very expensive, but that's also very different too. They have very sophisticated investors involved, like the Mayo Clinic, and they
Oh,
have a professional board of directors, people who've been there, done that. So that's kind of on the far end of the spectrum for us in terms of like companies that are truly, venture backable and could be very big companies.
all
Most of
right.
our portfolio are companies like Adele with Babies on Broadway uh, and Mercedes Austin, who founded Mercury Mosaics that makes custom-made, handmade tile
Oh, wow.
and beautiful mosaic kits. So again, that's us though. We love a diverse portfolio. We love to support the entrepreneurs. John Swart and Anna Haugo at Cytotherics are some of the best, and in Mercedes and so forth. And so for us, it really comes down to the people. It's really the people because they're our partners at the end of the day. That's what we look at and what we think a lot about is, how can we, support these entrepreneurs and their journey building their business. And a company like Cytotherics is going to get really big and sell someday. That path is known. It's not going to be a multi-generational business. Wouldn't make sense for them. It's a very in need medical technology company that's literally going to save lives someday. But you've got on the other spectrum companies like Mercury Mosaics and Babies on Broadway and Foreverance, where maybe they don't want to sell for cash someday.
Sure. I suppose eventually they will, right?
Well, eventually, right. It could for the
Well,
vast
that could be.
majority of them, that would happen. But they're not time constrained where it has to be the next 3 to 5 years or whatever the case may be. It could
Oh,
be
okay. I see what
10
you're
or
saying.
20 years or whatever fits their time frame.
Yeah. So these businesses that you're coming across, do you have to sell them essentially to the investors, or the investors picking and choosing which companies that you have that they're
No,
interested in investing in, or?
Hill Capital Corporation is the management company, and then Hill Capital Fund is the fund. But as the management company, we're identifying companies to invest in and underwriting that. And so by the time we bring it to an investment committee meeting, the investment committee is very aware of our pipeline companies we're looking at. But by the time we bring it to an investment committee, they're really just making sure we've done our work, like background checks have done the financial model and that everything makes sense for kind of like a final check and a final vote. But
All
when
right.
we make a commitment and we give someone to term sheet, we're good for that $500,000 to $1 million, absent some red flag that would come up in due diligence.
Sure. Fair.
Yeah.
Tell me, you raised an interesting segue here about paperwork. I
Yes.
imagine putting together an investment fund from a SEC point of view and all that jazz is not as easy as just sticking your shingle out there saying, "Hey, I'm an investment fund. Throw me some money. We'll throw it at some businesses. We'll make some cash together. It'll be easy, right?" I imagine there's some red tape you got to deal with. Can you
Yes.
tell us about that?
So, yeah. So Hill Capital Corporation actually started, we are in generation one of Hill Capital Corporation. We started as a business development company, a BDC, and we filed with the SEC. It's a story unto itself, but it is difficult. It's expensive. There's very detailed reporting to be a publicly filing company with the SEC. And so it's very few can really do it, and especially do it well. So that's a whole world unto itself. And then the vast majority of capital in the private space are private funds. You think about kind of like the venture funds and, the fund that like Generator has and others, that's just all, a private fund, and they don't have to do, the traditional filings with the SEC like some of the big funds do, like BlackRock and KKR and so on and so forth.
They do not. Okay, I wasn't aware of that. Okay.
It all depends on the regulatory framework in which they've chosen to operate. So
Okay.
we could spend a whole hour talking about that, but it really depends on the framework of which they are choosing to operate. If it's a very closely held investment fund, some friends and so forth, like you described, I mean, that can be very informal. They can kind of do what they want. But if you start bringing in outside investors and people you don't know very well, that gets into a whole different realm of legal and regulatory compliance that one needs to abide by.
All right. Where do you guys fit in there?
We are very closely and privately held.
Okay.
Yes.
Gotcha. So the investors, you're not just putting out a newspaper ad
No,
or
gosh, no.
or
No.
I don't know,
We are
maybe not a
not.
newspaper ad, but you
No,
know what I
yeah.
mean? There's a big billboard saying, "Hey, throw some
Yeah.
money at us. Let's
No, it's
invest it."
it's very closely held. It's a very small group. So
Gotcha. How or when did you start this?
So my journey with Hill Capital started in 2014, and it really got off the ground in 2018. So I have a heck of a founder story myself for that first 4 years. It's tough. It's a slog. I mean, Hill Capital Corporation was a startup no different than any other startup. There was a handful of us who put in our own cash, and I worked over 11,000 hours, basically uncompensated, pulling things together. I put a lot of time and effort into it, and use my savings to be able to do that and to fund this to kind of get it going. So it's a journey unto itself. It's not easy to start a fund, and there's a lot of reasons why there aren't more funds like this. And I wish there were, and I hope that we are an inspiration for more funds to become available, because there's a lot of need in the private businesses to get more access to capital. And that was our driving motivation to launch Hill Capital. So
So what made you found this? Did you exit a different business or
so
just fall
I
into a bag of cash?
I did not fall into a bag of cash. I'll just
You
say
never
that.
know, right?
But yeah, no, that's all good. I have done well, without a
Okay.
doubt, but I did not fall into a bag of cash. That sounds fun.
Yeah,
Uh,
right.
so my whole entrepreneurial journey started when I left investment banking, and so I had been around deal making the start of my career. That started with writing Wall Street research, doing investment models, switching to the investment banking and advisory side, so doing fairness opinions, valuations for companies, IPOs, mergers, acquisitions, and just capital formation, broadly speaking. So I had all that background. And my founder's story, James, was really around seeing how disconnected Wall Street is from Main Street. And it
Mm.
really bothered me because as a young person coming out of college, you kind of have this feeling like everything in the world is already kind of figured out. And, Wall Street is probably well suited to help all companies wherever they are. And to see firsthand how Wall Street has really become only available to companies that are doing over 100 million in revenue and, could be $1 billion public company someday. It just was jarring, to say the least. And so through my, call it, formation period, when I was a young person, kind of, cutting my teeth in the world of finance, I just realized like how broken the world was for entrepreneurs and small businesses. And that was really the underlying fire and motivation that I had to start what became Hill Capital Corporation.
Got it. So it sounds like you had some experience as far as looking at the back end of the businesses and
Very much so.
things
Yes.
like that. So that had to help quite a bit.
Yes.
And then was it tough getting investors into the the portfolio? I don't know what you call it.
Yeah, bringing in what most would call LPs, because a lot of funds have a LPGP structure, limited partners. But yeah, it was really hard. That's a lot of networking, a lot of connecting, a lot of, sharing the vision and the story and so forth. And so I resonate with all founders that, have to fundraise and bring money in. You literally have to have hundreds and hundreds of conversations to bring together the handful that are ultimately going to be investors. And that's been my experience. It's very tough, it's painful, it's scary. It takes a heck of a lot of work and a lot of trust and faith that it's all going to work out in the end. And so some companies are extremely lucky. And of course, those are the ones that grab the headlines. Somebody, has a hot idea and they, get investors in a heartbeat. But that's the fraction of 1%. Everybody else, 99+%, they have to grind it out and scrape up their knees, crawling around begging for people to listen and ultimately, hopefully, to invest. So it's tough to fundraise. That's why I spend a good chunk of the book talking about fundraising strategy, because I've lived it and I've helped people do it. And that's kind of what I've been doing for pushing 30 years now.
Nice. It's interesting here in Madison. I imagine just like a lot of other places,
Yep.
they have the startups, the generators of the world kind of thing,
Yeah.
bringing some of these businesses together and educating the founders, all that jazz. And I have seen some crazy money get thrown at some companies that did not have a revenue model. And I am not in a position where I can throw millions of dollars at an investment, especially at a company that doesn't have a revenue model. And I've seen it first, well, maybe not firsthand necessarily, but at least watched it unfold over the course of years where, hey, this company raised $5 million.
Yep.
And then 3 to 5 years later, that company folded. And it blew my mind that there were investors that made that much money somewhere else that were throwing money at a business that didn't have a revenue model. So can you talk to me? I don't necessarily know what you guys are investing in, but why would a company or why would an investment, people with money like that, throw at a business that doesn't have a revenue model at all?
James, I'm in the same boat. It took me 2 decades to look at and study and to figure out why that is. And
Okay.
I figured it out and I wrote about it in the book. It
Oh,
boils
tell
down
me
to
the
it.
Cliffs Notes version here.
Yeah, it boils down to the magnetic vision. So the founder of that company that attracted a lot of money had a vision. And the reason why I use the qualifier magnetic is because it's one thing to have a vision, but it has to be a vision that can be articulated where it attracts others to it. And
All
so the
right.
really good founders, the ones that raise a lot of money and grab a lot of headlines, have a strong magnetic vision. They're talking about, like, if you think about, like, we could talk about companies like Amazon. Bezos had a hard time raising money early on, but when he was able to start articulating that it was not just about selling a few books online, it was about understanding and having the logistics and cracking the code there so he could expand into other products, and why the word Amazon was used, because it's the jungle and there's a lot there.
Mm-hmm.
That's where people got attracted to that and started to sync up and provide the investment capital that Amazon needed to be what it is today. That's the difference. That's why you see in Amazon, again, we could keep talking about, because it's a great case study, even as a public company, for many, many, many years up until recently, was never profitable. And they
Right.
got a lot of flack. And one of the godfathers of the top of ground valuation, Demoteran, he talked a lot about Amazon and, why is it that they have these huge valuations, multi-billion dollars when they had nothing in sight to be profitable? Well, it's because of Bezos and the magnetic vision that they had to keep building this. And that's what you're seeing with today. You think about some of the biotechnology companies that this happens with, the technology now, AI, but they have a vision of what all of this could be someday. And that's what people are buying into. That's why they get monstrous valuations and big money.
Gotcha. Okay. Yeah, I suppose things like Uber that I think they're profitable, and they weren't for a very long time.
Right,
And
but
they,
in the early days of Uber, they to think about like that business model, like really people are going to drive around their own cars and pick it up, and there's a great story about Airbnb, like really people are going to have people in their houses and so forth. But
Mhm.
those founders did a really nice job of being able to weave the story and say, look at this is what the world can look like with this business model, and people start to buy into that.
All right.
That's where valuation, that's what I talk about in the book, is that's where kind of valuation goes out the door in terms of like traditional valuation multiples or anything you want to,
Oh, because it'd be
kind of,
worthless.
well, it could be. It's either going to be worth a lot or nothing.
Right.
So that's where people are
Yeah.
willing to make that bet.
Yeah. It's just, it reminded me, or has reminded me, of the whole .com bubble back in the
Yeah.
early 2000s when people would throw money at anything that mentioned the word internet,
Yep. And
and
there's
the
always something, right?
pets.com thing and all that kind of
Yeah.
stuff.
Yeah.
It
Yeah,
was,
I mean, yeah, in the 80s, it was the telecoms. You go back through history, everything through history. Back in back in back 100 years ago, what the stats are ridiculous. There's thousands, if not tens of thousands of car companies.
oh,
Now,
yeah.
we happen to know a few of the survivors, you
Hmm.
know, Chrysler, Ford, Pontiac, so on and so forth, that became GM and Ford and so forth. But there were a bazillion car companies that were, that people were putting money into and they were going public and on the stock exchange. So,
Sure, that's fair. That's fair. I imagine back then it was easier to start, easier, not necessarily easy to start a car company, and it was the new exciting thing.
yeah,
Horses were going away, right?
yeah.
So interesting.
I think
Um,
it's always hard to start a business. People, I think about that a lot because some people say, "Oh, it's easier today because you have the internet," and it's like, well, yes, maybe some of the access to things is easier, but on the flip side, it's as hard as it is as ever to get in front of potential customers.
yeah,
That
yeah.
it's with there. If you got an unlimited amount of money, you can solve a lot with buying marketing and stuff like that. But if
Oh,
one's
yeah.
bootstrapping, it's really hard.
Yeah, it reminds me of the movie Catch Me If You Can,
Oh, sure. Yeah.
when Leonardo DiCaprio's character was talking about how it's easier to do essentially what he did now with the internet and stuff like that. But then I was
Sure.
thinking, well, it's also easier for them to catch you because there's way more breadcrumbs that you have to leave behind just with all the technology that we have.
Sure.
They know
Exactly.
where you are, when you are, and what you're doing, kind of thing. So instead of just taking stickers off of airplanes,
Yeah.
slapping
Yeah.
them on a check, whatever.
Right.
So I guess you were in the Wall Street world. Now you're in this world. Do you miss the Wall Street world?
No, not at all.
Not even a little bit.
No.
Okay, that's all right. That's all right.
I mean, the only reason I pause is because I think one is always tempted by there's a lot of money to be made on Wall Street. You know what I
Mm-hmm.
mean? Like you know, those are some of the highest paying jobs in the world. And they can come with glamour if one cares about traveling a lot and eating at the finest restaurants. But if that's not what motivates somebody like me, it's there's nothing to miss. Um, what motivates me and why I get up every morning is because I'm very motivated to speak with and help entrepreneurs.
Okay.
And that's what I love to do. And I love to do this type of stuff where it's sharing insights and being able to talk about entrepreneurship and helping people really think about like how to create and build valuable businesses and not get snookered out of them along the way because there's a
Right.
lot of bad actors out there. And so that's the stuff that motivates me day in and day out because I've for for my little career so far, I've seen a lot, and most of it sends shivers down my spine. But when you see an entrepreneur like Mercedes Austin with Mercury Mosaics, who's been grinding it out now for over 20 years and built a very successful business. There's
Nice.
nothing better in the world than that, and that's what I love to be around because that's what inspires me. And that's also why I'm a member of Entrepreneurs Organization, EO and EO Minnesota. I love being around entrepreneurs and seeing and sharing in their journeys.
It is, I love it as well. I mean, obviously we're on a podcast about it.
Yes.
It is interesting when you talk to an entrepreneur versus when you talk to someone that is not an entrepreneur or doesn't even, a lot of times you run into people that just don't even understand.
Nope.
Why would you start a business? Why don't you just get a day job kind of thing? It's, it makes for very interesting conversations either at a coffee shop or bar, whatever. Entrepreneurs, you can talk for hours because everybody's got stories
Yes.
in that realm.
Yeah.
And I don't know if, I mean, day job people, it's not to say they don't have stories, but they're not as cool, I guess, from my perspective, anyways.
I agree.
Tell me the biggest success that you've had so far since you started this. I mean, you've been going, you said 2010 or 2014. I apologize. You started
Well,
2014.
2014. And so,
Okay.
and the fund and everything got off the ground in 2018.
Okay. So you're talking decades since you started it, but you still got whatever, quite a few years under your belt as far as what investments turned into good investments. So do you have any wins that are pretty cool?
I would point to Go Route. That's one of them that is top of mind. Mike has been very successful selling his sports technology company, technology to football teams.
You have to help
And
me with what is Go Route?
Go Route basically has a smartphone that is utilized by players to study a route for practices. That's
Hmm.
where the original idea was. And so the big idea and where it's very successful is that the teams can run 2 to 3 times the amount of practice routes during a practice than they would if they're still using paper and whiteboards.
Wow.
And so it saves
Okay.
people from huddling up and spending all that extra time so they can keep practicing, the various routes. And so that's where he started. And then now that technology is literally expanding rapidly into softball and baseball and basketball, because there's now a lot of new rules that have been updated around the use of technology and communications in athletics. And
All
so
right.
Go Route is doing exceptionally well right now. So that's been a really fun one because uh, like most entrepreneurs, Mike Rowley had to pivot his business model several times.
Okay.
He started off being dependent on a Wi-Fi system and was able to work out deals with the providers of, the 5G networks, the cellular and broadband networks, and be able to make it so, he could reduce and eliminate latency and issues around Wi-Fi. And so his journey is quite inspiring. So it'll be fun to see where Go Route ultimately lands, but it's doing very well right now, and it'll be fun when Mike can really share his story someday.
That is cool. I look
Yeah.
forward to having them. It's
Yes.
interesting you mentioned the Wi-Fi thing because I'm thinking Mike putting together this business plan and the cool thing, knowing the routes for football and finding the problem. And
Yep.
then his biggest issue is the technology thing. Like, oh gosh, come on. I got to learn about 5G now.
Well, yeah, that's a whole story unto itself. I mean, all of our companies that have, a decent amount of technology within their product or service has some story like that because it's always being updated and changed and so on and so forth. And so there's always stuff coming out of left field, and I think it is and going to accelerate now with AI.
Mm.
And so that's part of the risk. I mean, people think like software businesses are the best businesses to be in. From a upside potential, they definitely are, but they're not without their pitfalls and challenges. And a lot of software businesses go under, especially if they have
Oh,
to
no
spend
doubt.
money on sales and marketing.
No doubt.
That's a big one because I'm now talking to a lot of people about like any pay-per-click advertising people are doing. I mean, the numbers have gotten bonkers. People, are now paying multi-dollars per click, and that
Oh,
that
insane.
economics doesn't work as
Yeah.
like they did.
Yeah. Really quick story there. I had a online flower ordering business for a hot minute. And
Yes.
and pay-per-click advertising, I thought was going to be the only way that we could get enough volume to make it worthwhile. And
Right.
I think it was $18 a click or something like that. It was stupid.
Oh man.
So we stopped that business before we even got off the ground because I talked to different flower shops and I'm trying to figure out how are you making any money if you're paying $20 each time somebody clicks, not even necessarily buys. That's insane. It was bizarre. So
It is
I
very
don't know if they
insane.
are.
Yeah, it's it worked really well when it was 15 cents a click and so forth, and got
Yeah.
hard at a couple bucks, and now, being in the teens and 20 bucks a click. I mean, that's just ridiculous.
Yeah. It's not worth even going down that road.
Yeah.
There's
That's why we're
way
seeing
more channels.
Yeah, that's why we're seeing companies like Foreverance that are, very successful with, like social media posts, because they make custom made urns. So they
Oh,
got really popular in a lot of national media attention when they made the ceramic urn for Prince's estate when he died. They built it of Paisley Park.
oh
And
wow.
so they've got a lot of stories that, people share about the custom urns. A lot of it is the classic car that dad or grandpa had that, they get made into an urn, or like their dog, their favorite dog or something like that. And so those really pull on the heartstrings and work really well for social media. But when you buy clicks to sell an urn, extremely difficult.
I bet. I
So
bet.
yeah.
Interesting website search there.
Yeah, exactly.
So tell me, when you first put this together, just to figure out the chicken and egg scenario, you're putting together Hill Capital.
Yep.
You got to get some investors, but I imagine you're talking to everyone, not necessarily knowing where their net worth is at. And you're going to
Correct.
find some investors that are like, hey, I got whatever, $500 to throw at you. And you're like, we're not quite there.
Yep.
Or how did you navigate those conversations? Because that had to be challenging right there.
Yes, it is. But, there's two things that move money, James. It's trust and respect,
Okay.
or excuse me, trust and emotion. So you
Oh,
have to
there we go.
build trust and you have to build rapport, but there has to be an emotional hook too to get people to, to be able to write a check, whether it's in a fund or, getting an investor in a business, or a donation to a nonprofit. So it's really about that trust piece, is the ability to build trust, and to get them comfortable about what and how they think about where they're allocating capital. And so, there's an art to it. I've been around finance and money my whole career, and so, it's never easy, but you do just build that trust and have people share insights about what they're looking to achieve and how, you can be a solution set to what they're looking to do. So,
Sure. Tell me, when you started this fund, how did your family react to you quitting your day job, so to speak, to starting this thing?
well, I'm very blessed because my wife Ann and our kids were very young at the time, so they didn't know any different. But uh, my wife Ann has been very, very supportive, and she's the opposite of me. Like, she does not like working for small businesses. She loves to work for big corporations. She works for Fortune 500, Fortune 5 companies,
Mm-hmm.
like around the Twin Cities. And so, but as an entrepreneur, your most important co-founder is often your spouse or your loved one. And
Right.
for me, Ann was definitely, my most important co-founder. And be frank about it. It was her income and definitely her health care that allowed me to go try these things and to try to get them off the ground. Because if I didn't have that as an entrepreneur, it's nearly impossible. I mean, the healthcare alone, I was talking to an entrepreneur today, it's always the same thing, but getting healthcare insurance for somebody that doesn't have W-2 income is extremely difficult
Oh
and
yeah.
expensive. And it's a
Yeah.
real problem in our society. So,
Yeah, it's funny
so
that you say
yeah.
that. I just heard a stand-up comic talking about this yesterday. And he's like, hey, I forget he was starting his bit. And he said, hey, I don't have health insurance because I'm an American.
Yeah.
It was kind of funny. And even my wife, um, when I first started my business in 2006, on her LinkedIn profile, she put chief health insurance provider or something like
Oh,
that.
that's good. Yeah.
She's a teacher, so she didn't, her LinkedIn was useless to her, I think, or all but useless. So it's funny. They might still be there.
Well, teachers get great healthcare coverage, and largely speaking, so that's good. We've got a company we invested in called Solarte Health that provides health insurance, and their biggest customer base is teachers because they provide much more affordable access to healthcare than traditional plans. It's usually about 50% less because they have a network of independent providers. So
Oh, wow.
I get it. I mean, we've seen a lot. And actually in your hometown, Madison, we invested in Beam Healthcare that
Oh,
provides
really?
telemedicine.
Okay.
And they actually have a service that you can purchase as an individual or as a small business where you can
Yeah.
get telemedicine services. And we utilize that at Hill Capital.
It's funny. I met them. Oh, man. That's been a few years. I,
Yes.
I always think, like, was it pre-pandemic
Dr.
or post-pandemic?
Surju Patel,
Yeah.
wonderful, wonderful entrepreneur.
Yeah. That's interesting. I was trying to get them on the podcast, but that was, I mean, probably when we first started
Yes.
years ago. So yeah, interesting.
Yeah, Sergio is worth talking about and are talking with and getting to know and sharing insights because that's a whole topic unto itself. How to navigate healthcare, especially for small businesses and entrepreneurs.
Oh,
So,
it's a huge deal. You kind of take it for granted if you're healthy, or you just running by the seat of your pants with your business, so you can't really think about, or you're not
yep,
focusing on anything else
yep,
until something happens from the health point of view, and things get expensive, I guess, awfully
exactly.
fast.
Yeah. So I would encourage people to, take a look at those things and get to know them because that's a big part of the entrepreneurial journey.
Fair,
Kind of
totally fair.
unfortunately, but it's just the reality.
No, Patrick, I know we don't have a ton of time left, but I want to talk to
No.
you or ask you, if I'm a small business and I want to reach out to a company like yours to raise money, what
Yes.
are some of the things that I should have prepared when I reach out to you, or what are the things that you are looking for in a business?
Well, one of the biggest things, we chatted about this is really having that vision understood and be able to articulate that and truly being genuine to what you want to achieve as a founder. And I say that because unfortunately, in my opinion, a lot of accelerators and other experts out there in this world will coach entrepreneurs to really speak about the business as it could pertain to that investor. We
Mm-hmm.
really like to hear what is the interest of the founder and what they're looking to do. Because
Mm.
for us, if an entrepreneur wants to build a business and, have it be a lifestyle business and maybe hand it over to the next generation, that's fine. And we embrace those stories. But a VC would shut that conversation down in a few minutes.
Okay.
So what's important to us is that the founder be really genuine in who they are and what they're looking to do. That goes a long way for us. And then, of course, we want to know the things about, where's the business today? What is it? How much money does it need? It doesn't need to be precise, but have a sense of like, hey, this business probably needs $1 million to get to profitability, or it needs $40 million because they have to do all these complicated, expensive things. But having kind of a pulse on what that looks like is very beneficial. Um, and then really just kind of cutting to the chase of like, you know, the economic engine was what I call it, is, really articulating like we sell a widget, it's costs us this to make, we sell it for this, and we have to spend some money in sales and marketing to get out in the marketplace. But cutting to the point, kind of like I think, people have a love hate with Shark Tank, and I think that's actually from the standpoint of hearing those entrepreneurs come in and answering the types of questions that the sharks have, I think is a pretty good indicator of what's important and kind of be ready for.
Yeah. 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 I mean, I'm a fan of Shark Tank. I think there's unnecessary drama, but I think maybe they just do that to make the show more entertaining
Right.
or
Or they do
something.
need
But
to
no,
be.
for the most part, I think that's really, for the most part, all you really need to know. I guess as
Yeah.
long as the numbers that they're giving are legit
Yeah. And
and
the
not
other
just,
thing I would say, James, I love and appreciate your question because um, I think it's really important that entrepreneurs not get too hung up on making things perfect,
mm,
because perfect gets in the way of execution. And when it comes
yes.
to talking to investors, they need to get going. So if somebody wants to, I don't mind if somebody is a little bit early and reaches out to us, we'll get to know them and talk to them and say, hey, figure these things out and let's, reconnect in 6 months or whatever. Completely fine with us.
Yeah.
If somebody waits too long to have everything perfect and all their talking points perfect, that's going to get in the way. And actually, we would see that as a red flag that they're overanalyzing things. I call it analysis paralysis.
Oh, that's
An
fair.
entrepreneur needs to execute and move. So
Yeah. Fast decisions. When you have invested in a company, I guess we touched on this with the exit a little bit. Do you advise companies about when it's time to pull the chute or sell, or do you more or less just leave that in their hands?
we leave it in their hands, but we meet with our portfolio companies on a monthly basis. So we don't take
Oh,
board
you
seats.
do? Okay.
Yep. We don't take board seats. We don't dictate strategy. We're not overseeing and having opinions on hiring and firing and all that stuff. But we do get together with them monthly and we simply ask, how's it going and what can we do to be helpful? And we've
All right.
had a number of companies that said, hey, we're starting to think about an exit and we'd really like, some help thinking about this. Now we have 56 ambassadors today, and a couple of them have very strong M&A background, have literally led corporate development for Fortune 500 businesses. And they've made multi-billion dollar acquisitions, divestitures, and so on and so forth. And so we can provide them with access to people that can share insights on, hey, here's what the things you want to think about as you prepare the company for a sale. You want to have your, processes in place and documented and so on and so forth. And we also host events where we help educate and provide those insights. But it's when our portfolio companies come to us and ask for it, where we'll give them all the help that they need.
Nice.
Yeah.
I love it. Well, Patrick, thank you so much for being on the show.
Yeah, thank you, James. It's really fun to share the insights and to have the conversation with you.
Yeah, absolutely. Where can people find you?
Yes, I'm easy to find on LinkedIn. So Patrick E. Donohue, Hill Capital Corporation. And anybody can reach out to me directly, Patrick at hillcapitalcorp.com, HILLCAPITALCORP.com. So Patrick at hillcapitalcorp.com. And I promise we'll get back to you, especially mention that as on the podcast. So happy to be helpful to anybody in your audience. So,
I love it. I appreciate it. Thank you so much, Patrick.
Yeah, thank you, James.
This has been Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. We are locally underwritten by the Bank of Sun Prairie. If you're listening or watching this on the web, if you could do us a huge favor, keep the algorithms happy, right? That's thumbs up, subscribe, and of course, share it with your entrepreneurial friends, especially those that may need a little extra cash to get their business growing. My name is James Cademan, and Authentic Business Adventures is brought to you by Calls on Call, offering call answering and receptionist services for service businesses across the country on the web at callsoncall.com. And of course, the Bold Business Book, a book for the entrepreneur and all of us, available wherever fine books are sold. We'd like to thank you, our wonderful listeners, as well as our guest, Patrick Donohue, the founder and CEO of Hill Capital Corporation. Patrick, can you tell us that website one more time?
Yes, hillcapitalcorp.com. And they can also find me at breakoutvaluation.com.
Breakoutvaluation.com. That's right. You have the book.
Yes.
So where can the book be found?
The book is on Amazon. It's on Audible. I recorded it. I narrated it myself, which was a fun experience. But
nice.
On Amazon and Barnes & Noble and everywhere books are found.
I love it. I appreciate it. Past episodes can be found morning, noon, and night. The podcast link found at drawincustomers.com. Thank you for listening. We will see you next week. I want you to stay awesome. And if you do nothing else, enjoy your business.